This week, the whole world looked up. Everyone wanted to know what it looked like from up there. And I understood the impulse.
Because from the ground, every city looks the same. Traffic, noise, competition. Everyone convinced the person beside them is the obstacle.
From up here, the chaos becomes patterns. The noise becomes neighborhoods. The competition becomes connection.
But the message I would have flown up there is different than the one the world saw. Because freedom was never at the top of the building.
The day my view actually changed, I was not above a skyline. I was standing in a manufactured housing community in Arizona. And I stopped seeing a house. I saw a payment stream, a contract, 20 years of monthly income secured by a first-lien position on the one thing people never stop needing.
Everyone wants a better view. Most people think that means climbing higher. I learned it meant seeing differently.
Win Mobile Homes, Mobile Mailbox Money, Silvercrest Opportunity Fund. 3 businesses, 1 ecosystem, built around the payment that arrives. When the payment arrives, the world knows freedom. MobileMailboxMoney.com, SilvercrestOpportunityFund.com.
Welcome back to the Mobile Mailbox Money channel here today with Win Mobile Homes, Mobile Mailbox Money, and Silvercrest Opportunity Fund. Good afternoon, everyone. Today, I want to do something different. I want to open up, not with the pipeline at the end of the day, not with the numbers. I want to open up with a question that came up in a conversation this week, because I think that's the single most important question anyone in this room can ask. Someone asked me, what actually makes a good note at the end of the day? Not good paper, not good in presentation, actually good. The kind of position that pays for 20 years without drama. And the answer surprised them because it has almost nothing to do with the interest rate. A note is only as good as the transaction underneath it. Now, let me explain what I mean. Anyone can write a 14% note. The number on the document is the easy part. The hard part, the part that determines whether that note performs for 2 decades or falls apart in 18 months, happens before the papers ever existed. It is the home selection. Was this property a family-worthy home for them to fight to keep in a community they want to stay in? Is it the rehab? Was the work done right? Or is the borrower inheriting problems that will compete with their payments every month? Is it the community approval? Did the park verify income, run background, apply their standards, adding a second layer of underwriting most investors never even think about? Is it the down payment? Did the family put real money in enough that walking away would cost them something that actually matters? The compliance. Was the transaction originated correctly under Dodd-Frank so the paper stands up to scrutiny years from now? And is the servicing adequate, actually managing collections, documenting borrower relations month after month? Every one of those steps happens before and after signature. And every one of them is invisible when you just look at the note. That is the education I want everyone here to internalize. When you evaluate paper anywhere from anyone, you're not evaluating a document, you're evaluating an operation. Ask who sourced the asset, ask who did the rehab, ask the borrower if the borrower was qualified, ask who services the payments. And when something goes wrong at 2 a.m, are they available at the end of the day? Because the note is the output. The operation is the asset. Now, here's why I structure things the way I do. Win Mobile Homes is the operation. Licensed Arizona dealer, hundreds of transactions, the sourcing, the rehab, the community relationships, the underwriting, the origination, all under one roof, built over 8 years. Mobile Mailbox Money is the education where investors learn everything I just described before a single dollar moves. And Silvercrest Opportunity Fund is where accredited investors position capital alongside with the operation. First-lien paper on Arizona affordable housing backed by the full infrastructure that created it. Most people in this market are buying paper from strangers. Our investors are positioned behind an operation. They can see, question, and verify. That is the difference. And in private credit, the difference is everything. Right now, this platform has closed roughly $1 million in notes over the past 60 days, and the pipeline is active. The demand on the housing side is not slowing because affordable housing demand never slows. Every week, families walk in that cannot get financed anywhere else, not because they're unqualified, because the banking system was never built for this asset class. We built what banks would not. And the investors in this room have access to the output of the machine. So today, as we go through positions, we'll go through every one of them. I want you to look at more than the numbers. Look at the operation underneath each note: the home, the rehab, the community, the borrower, the structure. Because when you learn to see the operation instead of just the paper, you will never evaluate an investment the same way again. So today I've got my cohorts here, Sonny, James, and I think Sean's on here as well. Sonny, maybe if you could just introduce yourself for the viewers that don't know you.
My name is Sunny Finkel, and I am the Investor Relations Specialist for Win Mobile Homes. I am also the loan compliance coordinator for Win Mobile Homes, and I'm operating the chat today. So if you have a question or any kind of comment you want to make, feel free to drop it in the chat, and I will read it and answer it for you. If it's something that you don't want put in public, you can send a private chat, and I can answer your questions separately.
Yeah, that's
Welcome, everybody.
That's one of the benefits of joining these meetings. You know, you get to kind of ask and shoot back and forth some questions that you'd otherwise have to go hire an attorney, get a full paid education at the end of the day. So we do try to stop and answer those questions as we go. So, you know, shoot them as you see fit. Sean Gibson, if Sean's available, maybe if you could just introduce yourself for the viewers that don't know you. And you'll have to unmute your mic there, Sean. He may be indisposed. I've got my partner on the meeting as well. James, appreciate you being here today. You know, we do all of this for you guys. At the end of the day, I could potentially charge, you know, a consulting fee or just put out some formal education, but really we're wanting to build long-time relationships. And how do you provide enough value out in the market to be able to start garnishing private capital publicly? And that's putting this stuff out there weekly every Thursday at 1 o'clock Mountain Standard Time. We are currently streaming on Facebook, YouTube, and LinkedIn. So if you wanted to go back and view probably the past year's worth of meetings, education, questions, back and forth, you know, feel free to do that on the YouTube page. I realized the other day that the Facebooks delete after 30 days. So we're getting, you know, probably 1,000 views per mastermind. So unfiltered value here today. I see Sean logged in there real quick. Sean, if you could just give us some interaction today. Oh, no audio. You got visual only. So we're having some technical difficulties. Sean's out at a property right now. It looks like we are shopping like 5 transactions a week. You know, they don't all make sense, but those are homes that we buy in order to rehab and seller finance and then bring them on this platform at the end of the day. So we do all this work. Sean's out there in 115-degree weather, probably in not super cool manufactured home. I'm sure it's probably 100 degrees in that unit. So, you know, doing this stuff every day of the week to put a bow of capital investment and bring those opportunities to you here today. So we've got a few transactions in escrow. We've got a few construction loans we'll talk about today. We've got a few opportunities in multifamily and a few pad splits, if you're familiar, that we're implementing here in the Arizona market. So a lot to talk about today, multiple transactions and different type of structures. So hopefully, if you don't see something that you like on this platform, don't hesitate to reach out, because we do have some back office transactions that we don't always put out there. So this is, let's just kind of jump into the deal flow here today. So this is lot 195 in Sierra Estates, currently potentially pending. The buyer borrower's got to figure out how to add value to their application that's actually been approved by the community. So if you're unfamiliar with this platform, these notes have to go through 2 rounds of underwriting. Sonny, for the first round of underwriting with the community, what kind of benchmarks do they need to hit in order to facilitate a community approval?
First of all, they want to see that they have no evictions or felony convictions. They want to see that they don't have anything on their credit report with any kind of a charge-off related to any type of housing. No park charge-offs, no utility charge-offs, anything like that. No bankruptcy, no active bankruptcies. They look for them to make they look for them to take home at least double what their payment will be. And they do their little background checks and everything for the community.
So no past evictions, no past criminal, no open bankruptcies, verified income, and then additionally, they go through a secondary round of underwriting, which is super case specific to manufactured housing. If a single family loan, they really just go through 1 round of underwriting with 1 underwriter, where here we're held to the community standard, which in comparison to a single family note has some additional benchmarks that buyer borrower has to hit, like no past criminal. They could have an eviction and buy a single family on a loan. Just kind of a couple case specifics that go back and forth. Why am I talking about this? Well, the secondary underwriting criteria hits them for debt to income ratios, and ultimately similar to FHA style guidelines for them to facilitate qualified financing. This buyer borrower may not hit those benchmarks, so we're trying to get them to include a co-applicant, maybe a family member, a father, or something of that nature, someone close that we can hold into the payments of that transaction, and additionally hedge our risk. Sonny, do we do every transaction that comes to the table?
Not everyone, but the second round of vetting, I think, is just as important as the first one, because we use the National Mortgage Lending Service criteria, and their standard is the Dodd-Frank compliance. And we do Dodd-Frank compliance through a third-party underwriter.
So not every note is Dodd-Frank compliant, but the ones that do get the full stamp of approval at the end of the day. And then we take that, if they don't get approved, into a tertiary underwriting and evaluate if this still makes sense. Are they still risk mitigated? We'll still get them TRID and I forget the other state regulation, in order to facilitate the financing. It still can be done, but we have to make sure, obviously, we're mitigating our risk, and they can still actually afford it. Some people get kicked out because of form of payment, right? They're really making the money, but their form of payment isn't recognized under the conventional standards. Oh, I don't have tax returns, or, I only do bank statements. Those are disqualifying and qualifying criteria. So we take those into initial review. Long story short, so this home may not sell, it may sell. We're trying to work through that component right now, but obviously I wanted to bring it to the table. We bought, rehabbed, and sold, and are trying to sell this home. We'll sell this home with a roofing and construction partner here in the Valley. Shout out to Griffin Roofing and Construction. So there are business partners on this home in a little bit higher quality of rehab, because it's the actual GC running through these homes in order to stand behind it. This home has a price point of $125,000. I think we paid $250 for this home. We put upwards of $70,000 into this unit. It has granite. It's turnkey now. I'll have to get some updated photos. But at $125,000, the buyer borrower is putting a potential $10,000 down payment with an unpaid balance of $115,000, paying $1,430 a month for a 20-year term in first lien position. Not everyone has that higher above $100,000 to buy a note. And that's where most people end up leaning on the strategy of hypothecation, which means to pledge an asset in order to garnish capital investment, meaning using other people's money, not taking investor dollars. You're pledging a note in order to garnish capital investment and bringing those two together via documentation. And we have multiple people that facilitate that strategy, or another hedge fund, or really a high net worth private investor. When we get above that $100,000 benchmark, it becomes a little bit harder to transact that home. And that's why we've started a fund in addition. Not only could you buy this note in its entirety, or we hypothecate that position with another private investor, just like I was explaining, and they hitch their cart to a qualified operator, making a double-digit interest rate still in first lien position. Follow me. Right? Or they invest in the fund, which is the private credit platform that has about 30 positions performing right now, paying 10% interest only for a 1-year term, or 12% interest only for a 3-year term. The 3-year term's paid quarterly. Reg D 506C, that's an accredited private credit platform where we absorb these positions and will additionally diversify in the near future, where you participate on a per unit owner share in a performing portfolio. It's like depositing money in the bank, but you're getting 3 times the return in exchange for participation in this platform. That's lot 195. Currently on the chopping block. We're looking potentially to add some value to their application and hopefully do that transaction. If we don't, we'll probably pivot that buyer borrower to another one of our 40 homes that we have in inventory with Win Mobile Homes. Let's continue the meeting here. Lot 218, Grand, Missouri. We recently got a newer sales agent who speaks Spanish, so we're adding to our sales staff with Win Mobile Homes. Here's lot 218. This is in the Glendale market in a community by the name of Bel Air Manor. This year, I believe 2012, 3-bed, 1-bath. We bought for like 20 grand. We put probably 30,000 into it, and we'll exit now at 69.5, I think it is. And I even butchered this sales price on this calculator. So here, you know what? That's correct. So, no, I didn't. Give me a second here. At 69.5. Bear with me, with a $5,000 down payment on this transaction, as you see before you, is currently pending. 69.5 with $5K down. The end user, buyer borrower, paid 69.5. They're putting $5,000 down, included with $2,000 in prepaid taxes, insurance, and closing fees. The buyer borrower on a principal balance of $64,500 will pay a $802.07 monthly payment for a 20-year term. If you don't have a mortgage calculator, go download that real quick. Super easy to download, free on Carl's mortgage calculator. A savvy investor will know how to reverse calculate the monthly payments with the unpaid balance and figure out what a yield would be. Summary on this transaction: over 20 years on this 3-bed, 1-bath for 69.5 on $64,500 unpaid balance. The total payments received are $192,497. So you're doubling your money buying this note, contingent on it going to the full maturity date. If you're looking for additional documentation behind a specific transaction, throw your email and the lot number in the chat. So that way we can send you, upon request, the additional details that fulfill this transaction, like the sales contracts, the buyer borrowers submitting application to the community. So they're going through the first round of underwriting. And as we're taking these people forward, within our transaction processes, we're now looking for private capital to buy this position or hypothecate it, long story short. So that's kind of where we're at within this specific transaction on lot 218 in Bel Air Manor. The exit on this home from our buy, rehab, resale, we'll make, $20,000 on this transaction and parlay that into a long-term position. Those returns are unmatched outside of this case-specific asset class in comparison to other first lien, low-risk investment strategies. It's lot 218 in Glendale. So we're moving now from pending transactions, these two right here, to a secondary structure. This is lot 263 in Cielo Grande. I think we just reduced this price to $59,999 as the summer's here and we're looking to do a transaction. These, I think, are previous photos, so we'll get the updated ones, but it's a very clean home. Long story short, at $59,999, we'll seek a creditor, someone to use their capital, participate in a short-term lending component, right? At $50,000, they get first lien times your proposed rate of return divided by 12 is $416 a month. So first lien in exchange for $50,000 and a monthly payment of $416. Think of it like hard money-esque construction lending for us to stabilize this asset, which is turnkey already, right? Offer it for sale and then likely seller finance this home. So how do we buy these houses? Well, we raise the capital to buy the home and ultimately offer it back out available in a turnkey component, seller financing that transaction. Sonny, if someone were a first lien lender on a construction loan on maybe this transaction, what happens when we sell this property and they're maybe the short-term lender on this?
They get three options at the end of a construction period. They can either cash out, they can roll over their construction note to another construction note if they want to stay on the short-term game, or they can have the first right of refusal to take the property to the 100% assignment note, which would include adding the additional funding to get up to the full note amount and then assuming the note for the 20-year term.
So opposed to just waiting for a note to come to the table, we got 26 people on this meeting here. You position yourself at the front of the line on this specific asset, right? And get a first right of refusal of when the note inadvertently comes available. Most people don't know we seller finance about 95% of our transactions. Not everyone has $60,000 to spend. Most people are a renter trying to exit the rental market and just can't qualify for a single family home at the end of the day. Sonny, do you know what the average single family home price is in the Arizona market?
I'm not sure. I think it's somewhere around $450,000.
It's like $400,000. I think it's a little bit more. I think we're right in between each other. It used to be $350,000 like 3 years ago. So $400,000 to qualify for a $400,000 mortgage. Someone has to make like $100,000 a year with no debt. So their alternative for housing has now become that much more scarce. And in addition, in comparison with a $2,000 monthly average rental rate here in the Valley, this becomes that much more viable of a solution for them when previously manufactured housing was something that people put their nose up at 9 times out of 10. So, presenting new opportunities here in the Arizona market, to say the least, in addition with our combination of the strategy and seller finance, now we're gaining true additional velocity. So we went from pending, potentially coming to the table, to construction. Now we're on another construction opportunity. These lower priced opportunities don't come to the table very often. This is a potential either exit via rental, exit via lease option, or exit on seller finance paper. And I think we've recently just did a price adjustment in order to usher someone to the table at the end of the day. So say at 35,000 times your rate divided by 12 is 291.66. So $300 a month, and you position yourself in first lien on this transaction that's currently for sale on the regular market. A short-term lender coming into a turnkey property will likely reposition or restructure into a note or transfer to another property sometime, hopefully within the next 2-3 months. These properties have been for sale for 4 or 5 months, 6 months about. So we had 12 of them. We're down to, I think, 9. And as we exit these homes, we bring those notes to the table. To find a transaction at 35, 40, 50,000 as a full consummated seller finance note is really tough to come by. So as a 2-bed, 1-bath, they get through in a photo of a different property. They don't have double sinks, but they do have walk-in showers. All brand new finishes, central AC unit in that Glendale market, 2-bed, 1-bath for $291 a month, and drafted at a 1-year term. It'll likely will exit that position sometime within the next 2-3 months in Long Haven Estates. So ushering these forward to get fully transacted. We're being nimble in the market and diversifying as we go in 55 and older, as well as family parks here in the Valley. So those were construction and in escrow to seller finance. I'm just going to pump the brakes. We got a few more notes to go through, but does anyone have any questions at the end of the day? I always kind of just pump the brakes lightly through the middle of the meeting and see if anyone has any clarity needed, or a weird question, or something to check on due diligence. We'll just air it out a little bit. We appreciate you all being here today and your interaction. Remember, this is as involved or uninvolved as you'd like. And really the want to, change your personal position, change what your finances look like, change the hardship that you may be going through. It's done through creating financial independence. And how do we do that out in the market? That's a note investment strategy. Listen, single family and long-term rentals were working for the past 20, 40, 50 years, where now that just doesn't pencil out. And where's that alternative out in the market for someone to position their capital in a low risk mitigated structure and still earn the monthly distributions they need in order to go live the life that they want to live, spend their time with their family, go travel more. If you were looking at a $500,000 single family home to buy and rent out, if you took that same $500,000 and instead of buying one house, you bought 5 notes, you effectively in the next 30 days started receiving $6,000 a month with no banks, no loan, no contingencies, no hardship with tenants, maintenance, management, insurance, taxes. The list goes on. You could literally change your life buying 5 notes today with mobile mailbox money outside of any other investment strategy. This is the strongest monthly cash flow you could find in a first lien position. So let's continue here on to our third type of transaction, which is a performing seasoned seller finance note. What does that mean? Well, we've talked about the homes that are pending and potentially coming newly originated. When that note is newly originated, now a track record starts, right? For the next 6 months to a year. Those payments are churning. They're either making payment or they're not at the end of the day. A seasoned note sells for more on the secondary market than a newly originated paper. Let me say that again. A seasoned note holds more value than a newly originated transaction. Why is that? Because there's proof. There's documented, verifiable proof that payments were being made. In what other investment strategy can you step in and make this high of a yield 30 days after your transaction, where there's documented proof in order for that to be presented to you. There's little to no other options. So here we are today, lot 69 in Chaparral Village off major cross streets of Kyrene and Baseline. This transaction we bought direct from the community and ultimately facilitated a full gut to rehab. I should have brought up the pre-rehab photos because the video doesn't do it justice. This home's a 70s home. This was a 1970s manufactured home in the Tempe market that the park was going to demo, have it moved from the park, and they were going to spend $150,000 to get another unit in this condition in that lot. Where in comparison, they sold it to us. I think we overpaid by $5,000. It was a relationship thing. But we paid like $10,000. We put $80,000 into the unit and we sold it for $122,500. So we made like $30,000 on this home, and it's currently performing in our portfolio at $102,260.89 with a monthly payment of $1,274.61 for a 20-year term. So fully amortized. It's been performing, I think, right around the 6-month mark. It's actually an investor of mine's son who facilitated ownership in this home. So the people that are investing with us are even seeing the value that much more to have a family member or a grandchild or an aunt, an uncle, a grandmother facilitate housing in these units. This house looks brand new with new windows, new electrical, new drywall, resurfaced roof. I think we did a brand new roof on this actually, tile showers, tile backsplash for $122,500. I think his total monthly payment's like $2,400 a month. Where in comparison, his rental rate that he moved from was $4,000 a month. So he's now saving $1,400 a month in just pivoting in exchange for leaving a rental where he built zero qualified equity and actually got home ownership with a $20,000 down payment. So he put $20,000 down on $122,500 and the balance is $102,260. That is a calculated unpaid balance. The monthly payment doesn't change. If you're looking for the most recent updates in unpaid balance or the full collateral file, drop your email in the chat. We'll get that information to you. Identifier lot 69. So that's the payments $1,200. You're making $15,000 a year in passive cash flow in first lien position. That's lot 69. And for those of you that recognize this gentleman here, that's actually Sean Gibson on the screen. We'll continue down the way here. Now, these performing notes are notes that are in my fund. So I seasoned them in my portfolio and actually offer them to non-accredited investors to buy a seasoned position outside of the fund. A seasoned note being sold outside of the fund, you buy it out of my fund and you hold it within your account or LLC or IRA or solo 401k. Those transactions go at $2,000 above unpaid balance. So they go at a small premium in order to translate the value within that transaction because it's a verified, seasoned, performing first lien note. In adjacents in the fund, again, just to bring up, if you're accredited, you can participate today and start earning interest across 30 positions, right? And you participate and get your agreed upon return with no potential for leaks in distribution, or in other words, variance in the payments that you're receiving monthly. They hit every month at no cost to the investors. When and if a note goes non-performing, we reperform that asset and continue making the distributions to our investors. And how do we do that? Well, we have 30 notes performing in the portfolio, and that creates the stability to continue to provide your payments. Let's continue here. That brings us to the second performing seasoned note that we have in our portfolio, located Ellsworth and Broadway at Lot 20 in Pueblo Mesa. And that's actually Serena Guajardo, our executive sales agent with Win Mobile Homes. The internet's kind of fogging her face a little bit, but that's his Lot 20. Lot 20's, I think, a year 2012. I could get you the exact year manufactured. 2014, actually, on the screen here. So as a year 2014 in the Mesa market, this buyer borrower paid $120,000. He put a $10,000 down payment, and his monthly payment on $109,069 is $1,361.66 for a 20-year term. Right? So 109, you get $1,300 a month in passive cash flow. This transaction, being a performing note, fetches a $2,000 transaction fee, which compensates our sales staff, and ultimately a total acquisition of $111,000. For 111, this is more than $15,000 a year in cash flow, just about that. And you start participating. We changed the transfer from automatic funds transfer services to your desired account. And ultimately, you hold that position, right? You become the bank effectively via acquisition and start performing in under 30 days in most cases, sometimes around 50, depending on what time you do that throughout the month. Time is of the essence. You know, this is not a time to just sit back and be a passive viewer if you're really wanting financial freedom. Today, the vehicle that gets you to where you want to be is massive action, right? There is risk in investment. Remember that. And you have to kind of navigate that as you go. But if you're sitting back, failing to take that next step because you're either unsure or you haven't checked all your boxes or whatever it may be, you know, let's get you on with one of our sales staff or even me personally and kind of understand and help you provide further clarity into the bells and whistles that are provided with our platform. Sonny, if someone were to buy this Lot 20 within their portfolio and they were needing additional assistance down the road, what kind of bells and whistles does the platform provide to an investor who buys a note from us?
You're talking about if they have a problem, if they want to resell it, we can take it back for them and put it up for sale for them. If they have a default, we can help them get in touch with the borrower and help to cure a default. We can do a loan modification to help them get a behind payment put on the end of the note. We can help them reposition with another investor. We can change their investment from one property to a different. There's all the possibilities are endless. We're really flexible and we're really good at creating, you know, a program that is useful to everyone.
All great points. What's a full collateral file look like? Well, here's one right here, and we'll talk about this note in just a moment. But a full collateral file has the ultimate underwriting criteria, the contracts, the final closing documents, the insurance and taxes, the loan documents, you know, and a few extra folders that aren't normally in here. I think there's a couple of duplicates in here. But that being said, this is what a full file, this is what you're buying. You're not buying a house at the end of the day. You're buying the infrastructure that provided a promissory note to someone that was fitting to qualify. This is lot 64 in Winter Cove. And these are actually the pre-rehab photos. I wish I had the updated photos. We could get those to you. But as this 2-bed, 1-bath in the Mesa market off McKellips and Center. It's like Center and McKellips and Country Club, that Northwest Mesa market in a family mobile home park. Got new plumbing inside this home, newer electrical. We did do laminate flooring throughout. All this tile was actually in good condition. But as a $60,000 home, I think it was $59,500 is what we sold it for. The buyer borrower put $5,000 down, and their seasoned performing unpaid balance is $54,548.38 with a 20-year payment of $682.69. Now, that's not the most accurate up-to-date term on this contract. If you're looking for a note under $60,000, right, that has a track record, we can get you the updated photos of this transaction, of the new flooring, the paint we did inside and out, and the turnkey service that we provided to this end user buyer borrower. We can get you the full collateral file, the updated photos, and ultimately provide you some additional clarity. Lot 64. Put your email in the chat. That's actually the title right here. We turned a 72 from trash to cash. And the buyer borrower on 65,000, let's just get to the front photo here. 59.5 is what we sold it for. So on a mortgage calculator, their total monthly payment, 59.5.
5,000 down.
5K down. On a 20-year term, their total payment, lot rent in this park's like $700, I think it is. So with their monthly payment of $677.72, it's $682 on their term, on their contract, is like $1,400 a month. They own this house, get qualified ownership for $1,400 as a 2-bed, 1-bath. A $1,400 rental in the Mesa, Tempe, Scottsdale, that little surrounding area is easy. $1,600 a month, $1,550, sometimes $1,700, depending on what area. Really starts to inch up. So they're beating market rent, getting qualified ownership with a central AC unit and a park with a pool, jacuzzi, a family-owned mobile home park that we work well with frequently. A transaction that's not to be passed up at the end of the day. To find notes, I've got a lot of people that are requesting a $50,000 note or a $60,000 note. Not everyone has that 70, 80, 120 to be able to do a transaction. Those go extremely quick. Why? Because now we're talking about the conventional investor who has that extra 30 to 60,000 in their IRA, their solo 401k, or really they just came across the platform because they're a tired landlord and they got paid off. They got paid off from a home that they sold, exiting a long-term rental that wasn't cash flowing, or any of those areas that provide the liquidity of that 30 to 100. Some people just have that extra 40,000 in their IRA or whatever it may be. Those are all really scarce capital opportunities because of the low amount of capital in comparison to having to buy a comparable investment strategy outside the stock market in a conventional rental strategy or multifamily duplex play or whatever it may be. So to participate at under that $60,000 benchmark is really tough, and hopefully we can provide someone here today a valuable gem out in the market. So we will continue down the tree here on the additional diversification that we're doing out in the market, given our success in our primary strategy, Win Mobile Homes and Mobile Mailbox Money. Now we're diving into some more of a conventional structure. If you've never heard of pad split's one of the biggest needs in the nation right now because of the need for affordable rentals in the market. This is in the Tempe market off major cross streets of Scottsdale and Rural, close to ASU, facilitating a hedge in the student housing arena. So we have now a 12-bedroom unit that's coming to the table, and I actually did a full vlog on this transaction with Griffin Roofing and Construction. Let me see if I can just find that real quick, just to show you the vlog number. But long story short, it's a 12-bedroom pad split that's currently coming to the market. I think today we just got all the blinds in, and now we're being prepped to include the furnishing. Here in the next 30 to 60 days, we'll end up renting up these rooms to renters looking to rent by the room in an affordable rental rate at $800 to $1,000 a month, depending on how our testing goes. I think we bought this transaction for $600,000, and we put probably $400,000 to $300,000 into it in order to get it to a turnkey, almost a multifamily component. It is still single family, right? But we're running room rentals at midterm to be able to provide additional diversification. And I may not be able to find this quickly. Let's see real quick. So that's 1318 East Cedar. I can't find it right now, but that's as seen on our vlog. We do a walkthrough, check the vlogs out. That gives you kind of firsthand touch, feel, and taste what's going on in the market. That's one that we're bringing to the table, our first pad split in a single family home that should be done in the next 60 days. In addition to that property, we have another 10-bedroom single family conversion off of McClintock and University in the Tempe market, another student housing component. So in the next 6 months to 8 months, we'll have 2 turnkey 22 beds going in the Tempe market as a pad split by this 101 and 202 area, Cedars over this way. And here we are now at McClintock and University in a 10-bedroom pad split. We paid $300,000 for this unit, and we'll probably put that or close to that into rehab. The rehab is being done by our roofing and construction partners. And here's the home actually turning to a 10-bedroom unit. The previous owner actually owned this for like 20, 25 years. You see me talking to our contractors and our architect. This is not just us implementing these strategies. There's real players stepping into the component because they see the value, they see the need of affordable room rentals, and they see additional return on investment diversifying outside of conventional real estate investment strategies. You got to be nimble nowadays in order to hit the returns that you're wanting to hit. You can see this as seen on Mobile Mailbox Money vlog 148. We talk about the blueprints and ultimately, what we deem as another layout. How can we expand and get additional rooms in a unit that was really only originally permitted for, I think, 3 bedrooms. So check that out. Something worth looking at at the end of the day. Is anyone implementing pad split in this meeting? I hear a lot of people nationally talk about it in different markets. Has anyone dabbled in that at all? Please throw that in the chat. We'd love to hear from you. I have another opportunity we'll talk about in just a second. That's a live deal that a foreclosure took place and the other units are going to foreclosure scattered throughout this month. That is a larger level equation. I've arranged with an investor of mine to bring $2 million to the table, and we're $1 million short. So if you like the pad split model, I have a once in a lifetime opportunity for you to add 12 duplex run as a pad split model in the South Mountain market. The president of pad split actually came and personally walked through this unit, and he's aware of us trying to take down this transaction with some of our investors. He's foaming at the mouth trying to get us to turn this thing on, and we're $1 million short. So what may end up happening is if I get a few or one or individuals wanting to participate, we would inadvertently throw that in the fund if we were sectioning out, and we would get our per unit owner share of the $1 million contribution and ride equity strategy. Or we get into a one investor and ultimately, form a joint venture partnership and structured with the individuals that I have personally been in contact with. Here's the vlog. Here's the offer. vlog 156. You can actually walk through this entire project with us, talk with the commercial real estate agent, and ultimately know that there's distress in this component. They have now are actively being foreclosed on, and we've been in contact with every lender. The lender that orchestrated the entire transaction, we know him personally. He's actually a member of the Arizona Real Estate Investors Association. Shout out to Mike Del Pree, who owns Azria. We're main corporate sponsors of Azria. So that goes, in rubbing shoulders with seasoned professionals to find golden nuggets out in the market that are not seen anywhere else in the nation on deals just like this. So this is going to be implemented as a pad split. If we can take it down with our partners, we'll probably self-manage this at the end of the day because our diverse staff and availability and knowledge. In order to do so, saving 8% as a management fee is huge. That really starts to balloon our net operating income. And in a 3 to 5 year period, that's probably a 2x equity multiple. On this transaction, there's $2 million in equity day one. Day one. $2 million in equity. And how can I say that? Well, I've gone through the ringer here. I now have the title reports. I have the appraisal. Here's the appraisal that they appraised. Let me find this on this sheet here. They appraised $600,000 a unit. I'm sorry. Let me find this number. Bear with me here. It appraised at like $9 million total for all 12 duplexes. The total debt to be reevaluated, our purchase price is around $6 million. So there's a good $2 million in equity on this transaction. Already at day one. That's not including any net operating income or potential for upside appreciation. Here it is, indicated sales comparison approach, $400,000. It's $800,000 a duplex. There's 12 duplexes, and each one can be ran either individually because they're all individual APN numbers, or we buy them all. I would love to buy them all with the necessary $1 million, and we operate them together collectively and ultimately start getting these rented up and refinance in the next 6 months to get favorable terms, likely pull either all or most of our money out and either legacy cash flow this asset, offer it as an equity and debt strategy in the fund, become super nimble in that accord. I'm looking for $1 million. So if you're a multifamily investor, a syndicator, another hedge fund, raising private capital, this hits a lot of boxes for people looking out in the market for cash flow, for one, but also qualified operators to actually bring this to fruition. So that's in the South Mountain market. If you're interested, please put pad split in the chat with your email, and we will send you some additional information. My YouTube, we're at 210 subscribers. That's like pleading people to start following me. I think 30 days ago, we got 10 subscribers. Subscribe to my YouTube. We're currently live on YouTube right now. I put out blogs, masterminds, podcasts, interviews with industry magnates, experts like Eddie Speed, Mark Monroe, Mike Del Pree, Nate Hare from Directed IRA, Kevin Shortell, Patrick Franz, and Desi Arnaz of the Note Investor University. We've had Jeff Watson, real prolific private lending attorney, recently on the channel. We've had Dan Deppen from Call the Underwriter, Sohail Badruddin from Provident Loan Servicing. We've had a few others. I could literally go on for like an hour on the amount of individuals we've had on our platform. Greatly appreciative of that. Oh, and shout out to Nathan Turner of Diversified Mortgage Expo, all industry experts and magnates that we've rubbed shoulders and some even done business with at the end of the day. If you're unfamiliar, these notes get brought to the table by Wynn Mobile Homes. We're the largest dealer of manufactured housing in Arizona, third-party dealer. We don't really touch newer stuff. It's all used. And really, at the end of the day, there's not very many people that are implementing this type of investment strategy. We had a couple questions in here. Hi, everyone. Are investors purchasing the entire note, or can notes be purchased fractionally? We don't sell partials. That's extremely important. It could be construed as a securities, but depending on what kind of capital you have, we will likely find a transaction for you. We do some seconds, depending on the investor. So, Mr. Archie would love to talk if that's something at all of interest within the platform. And Miss Alexander, hello. What are your current requirements regarding minimum investments amounts and funding timelines? There is not technically a minimum. It's the notes that come to the table. So a transaction is taking place. You're not investing. You're buying a note, unless talking about the fund, right? So you're buying a position. Those positions on average are around $70,000 to $100,000, and some come very scarcely to the table at $30,000 to $50,000. So like $30,000 to $50,000, you buy a note, you buy it out of our portfolio, and you hold it within yours. Within 30 days, you start making the agreed upon rate on that note or contract, right? So pending your due diligence and us seeing you as a fit for a note investment on your own. We're not going to just sell a note to anybody that's uneducated or whatever it may be. We want to make sure that's a good fit for you, right? Because there is risk in investment. At the end of the day, it's important to evaluate, it's important to mitigate, but it's also important to understand that there's nothing that's risk-free. And that's why these returns are the way they are. We've built up this strategy ultimately to provide benchmark risk mitigation and upfront due diligence, so you can come in, do your initial review, and likely fund within 48 hours of that transaction. So mobilemailboxmoney.com. We've got my books out on Amazon. If you Google my name, Alden Guajardo, you'll see tremendous amount of other podcasts I've been on. But if you search on Amazon, Alden Guajardo, you can find the two books. They're like $10 and $5. I put those out there and wrote them with artificial intelligence just to provide additional value out in the market. The mobile mailbox money guide, the complete mobile mailbox money guide, teaches you how we risk mitigate the transaction, from buying it, sourcing it, underwriting it, to specific criteria, due diligence check boxes, what to do in a rehab, who to talk to, how to get the note underwritten. It's literally a case-by-case step strategy in that book that's like $10 for you to replicate what we're doing. And then the mobile mailbox money secured is the secured investment strategy that we have to offer out in the market. Silvercrest Opportunity Fund, we touched lightly a few different ways on Silvercrest, but we're currently offering in accredited investors 506C to participate in our strategies. Our credit strategies tab looks like it's not functioning right now. I'll have to get with my IT staff. But seller finance notes, we absorb these notes in the fund. Say you were tired of depositing your capital in a bank account and making 3 to 4% return, maybe even lower, or maybe a little bit higher. I can double your return in a similar investment strategy, and you get bank quality stability outside the stock market, outside low yield mutual funds, either with your IRA, solo 401k, or really just personal investment. Most people don't know your IRA, these products are qualified products. It's not you having to take or burn your IRA. These fit within the guidelines to hit tax-free or tax-deferred investment strategies in solo 401ks and IRAs. That's a big deal for a lot of people to find a 20-year note out in the market, and now you're making tax-free capital for retirement savings. That's a life-changing component. You do that 5, 6, 10, 20, 50 times. Now we're really cooking, and you just set yourself up for a long, mutually prosperous and fruitful retirement. Arizona Real Estate Investors Association. We talked lightly about ASREA. They're one of the largest real estate investment associations in the nation. This month, there is not a monthly meeting. In exchange for no monthly meeting, we have a seasoned investor real estate meetup at Magnum Cigar Lounge. Shout out to the Stickman Cigar Club. We started a cigar club. There's about 26 members in that group, and I'm actually a founder. So Silvercrest and ASREA, in addition with Stickman, are going to be putting on a investor event at Magnum Cigar Lounge in Phoenix. Mark your calendar, July 30th at 6 p.m., right? It is open invite. And ultimately, I'll be there with some of my investors, some of my partners, my partner, Mike Del Preet, and ultimately in the want to just, get to know people, shoot it around a little bit, maybe ask some questions, meet me in person, a great opportunity to do so. Magnum Cigar Lounge is off Union Hills and 16th Street. Magnum Cigar Lounge. Here in the Phoenix market. Here it is right here. So we've done a few meetups over here, and I meet up with the Stickmen once a week. The Stickmen Cigar Club is a bunch of business professionals in lending, other hedge funds, REITs, contractors, prolific AC companies from Apes HVAC and Plumbing to Griffin Roofing and Construction to Way Cool AC contractors to a few others that are quite literally the biggest in their industry here in the Arizona market. That group is probably a $250 million group that we're organizing, and now have our first chapter forming, I think, in Colorado, and 2 international chapters, one in Germany and one, I think, in Russia. So, gaining traction in the want for additional individuals to kind of get to know each other at the end of the day. We got a question here in the chat. I'm looking on your website. Looks like so many sold properties. I'll wait for some properties somewhere in the Phoenix area. These go quick. At the end of the day, it's not always reflected on the website. At the end of the day, the homes that do make it to the website do, get sold within a couple of weeks to 2-3 weeks. But to get to most updated lists, we're either emailing that out, or you reach out to us, one of our sales associates like Sonny or Sean, or really you could reach out to me personally. If you're like, maybe you could just provide some clarity, Mr. Ethan, on if you're looking for a note or are you looking for a home for sale. Those are 2 different transactions. While I put my information here in the chat.
One of the services that I offer as the investor relations specialist is to just take your phone call and sit with you and listen to hear what you have to say about what your investment goals are and maybe what your budget is. And then maybe I can make a recommendation as to what I think is the best fit for you, depending on what we have in inventory. Some people like to do it, backwards like that. And that seems to work out well for a lot of our investors. So you're welcome to give one of us a call and we can find something that fits within your budget that you have in mind.
Yeah, so, we work from Monday to Monday, 6 a.m. to 9 p.m. At the end of the day, we're here to do transactions, and what does that fulfill? That fulfills the want that we all want to get to financial freedom. You got to take massive action. And while we are afforded the blessing of the time in order to dedicate towards this avenue, we want to take full advantage at the end of the day. So, that's just one step closer to financial freedom. What do we call that? Mobile mailbox money. We appreciate y'all being here today. I'm going to leave you with a video and we'll go from there. If you're interested in anything we have to offer, don't hesitate to reach out today. Like I said, we're here to help. We're here to do transactions and make it happen.
I remember the day I signed the deed. I was proud, genuinely proud. I had done what everyone said to do. And for about 3 weeks, it felt exactly like they said it would. Then the first call came, then the second.
Then the third. Somewhere between the emergency plumber at 2 a.m. and the insurance renewal, something shifted.
The deed was not a document of ownership. It was a contract for everything attached to ownership.
The midnight calls, the unexpected expenses.
They showed me the appreciation. They showed me the equity. Nobody showed me the weight. I looked at the deed on my desk, then at the note in my hand. 2 documents, 2 completely different lives attached to them.
She slid a document across the table, not a deed, a note. She said, when you hold the deed, you own the obligation. When you hold the note, someone else does. You own the payment they send every month. First-Lien, security, just income arriving the way income was always supposed to.
Mobile mailbox money is where you learn the difference. Silvercrest is where accredited investors step into note positions already performing. The deed was never the dream. The payment was.
Thanks for being here this week. We'll see you next time. Appreciate you viewing today. Looks like I was a little out of focus here. That's okay. Feel free to join next week, every week, 1 o'clock Mountain Standard Time, or call us today at 602-888-CASH.